Hello, everyone, and welcome back to the new Blueprint strategy course. Today, we'll continue where we left off last week. We covered quite a lot of groundwork in terms of the supply and demand zones, the four various formations that we look at within our beautiful price charts. And we also covered a lot of practical application based on demand. We did back testing as well. And what we still need to do today is we still need to cover supply and translate the supply formations into our price charts, do some practical applications as well as back tests. And we also need to do a little bit of a TradeStation tutorial, because I now want to show you how to best use and what's the best setup for us as TradeStation users. Here you can see some of the practical applications that we've gone through. Last week, we talked about Tesla, we talked about Bitcoin, and we talked about Apple. And for all of those, we found nice monthly demand zones and weekly demand zones where we followed an easy three-step process. So we identified our two demand zones, rally-based rally or drop-based rallies. And we also talked about potential entries, stops. We talked about timing the market. We talked about risk to reward propositions and how we have a wider version and a preferred version, and what the difference is between the two. The main difference is that the wider version versus the preferred version is just a trade-off between profitability and probability of getting filled. And so we did all these beautiful practical applications and back tests last week. And today I want to look at supply. But before we do that, I want to show you the end result in terms of your setup that you should have when you look at TradeStation. So when you look at TradeStation, what your end result is going to be, it's going to be an advanced radar screen. It's going to be multiple charts with various time frames. And within those multiple charts, we then have multiple indicators displayed here as well. So you can see our true seasonality, our valuation, our COT index. Then you can see the true seasonality radar screen. And on the back end, you'll have the optimizer as well, which we then create a separate worksheet for. And in fact, for most of the indicators, we'll first create separate worksheets to do practical applications on later on down the road. And this is what the end result should look like. It doesn't necessarily have to look like that one by one, but obviously it could look similar. But you could then also eventually design your own worksheets. So at first, I want to show you how to create a worksheet. So if you open up your TradeStation for the very first time, what you will have is you'll have a desktop that opens up. So that's your desktop. And you'll have a default worksheet that you have opened up down here. What you can do is you can always add more worksheets here. You can always close those worksheets here. And you can always save those worksheets as you press on Save As. It will take you straight to your TradeStation 10 library. This is where you want to save all your worksheets. Now, if you, for example, are working on two computers simultaneously, for example, you have a computer that you have at home and it's a desktop solution, and you have a laptop for on the go to work on TradeStation remotely, and you have one TradeStation account that you want to access all your worksheets on simultaneously, then what you want to do is you want to consistently transfer those worksheets also to a OneDrive, because from there, you'll then have access to your worksheets from wherever you are. For now, we'll just save them within the normal library path, which is documents, TradeStation 10 workspaces. And you can just give it any name. For the sake of it, I'll now call it Blueprint Worksheet. And as you can see, this worksheet now is empty. And we need to fill this now with different windows. We need to fill this with radar screens, and eventually we need to fill this with indicators and strategy optimizers as well. But we'll start very slow, and we don't do everything today. We'll just do the needful today. And as we advance in terms of our trading skill and the trading know-how, we'll also advance simultaneously with TradeStation and how advanced of a user you are here. At the top left, you'll find File, Edit, View, Window, Help. What you also have is you have something called Apps. Now within Apps, you'll find chart windows, and you'll find a radar screen. So what I want you to do is I want you to add a chart analysis here. And what's going to happen now is that TradeStation will just open up a chart, and you can move it anywhere you want. You can maximize it. You can make it smaller. You can completely minimize it. Then it will go to the bottom left. And then again, you can make it very big and very small. Wherever you put it, right? If you make it bigger and then again smaller, it will always go back to where you had placed it previously, right? So it will remember the position that it's at in terms of the coordinates, and it will get the window back in place. So you don't have to worry about constantly having to replace them after maximizing and minimizing. At the top, you see the symbol name and you see the time frame. And then you get those beautiful candles that are as per the time frame. And what you want to do first is you want to double click on the chart, because there's a couple of things that you may want to play around with to have a similar outlook that I have. So if you double click on just on the chart with your left mouse button, then you should get the customized window right here. And then under general, what you would do is you would either enable or disable the watermark. If you enable it, it will come like this. Now, this may be the default setting. If you disable it, it will look like mine. After you have disabled it, make sure that you press default before you move on. Next, you could totally customize the status line up here. So you could show what you want to show. In this case, for the beginning, you could just leave it all checked. And here as well, you could remove and add whatever you would want to add. So you could, for example, add a description, and that description you could move up. And as we press set as default, as we press OK, now you can see, now we have the description here, NASDAQ 100 custom continuous contract. Again, I'm double clicking to go here. If you don't want this anymore, you could just simply remove that, set as default, and then it would go back to normal. Again, double click, and we can change the font of our status line, which is up here, and of our axis labels, which is our x-axis and our y-axis. And what I always like to do is I at least like to have a 12 here, but it will depend on the resolution of your screen. And as you make this bigger, it will just become a little more user-friendly in terms of the data and how easily it is seen by you, or when you share a screen as well. But that is preference. You may see on mine that I have a 12 here. In terms of the color, that's my background, and that's the default setting here as well. So I haven't changed anything in terms of the default setting. So if you're downloading TradeStation, if you're installing it and you're using it for the first time, that's the background that you have. What may be different is that you have a grid and I don't. What I don't want you to do, I don't want you to go in and change the color of your grid. What I want you to do is I want to change
the style. So here you can either show the grid, and you can see those lines here now, or you can unshow the grid. So if you show the grid, then you can see this window, and this probably looks like your default setting. Again, double click, unshow. You could even have session breaks, for example. Those session breaks may be quite useful if you are a daily income trader, because you want to know, hey, when are the sessions starting? If you use things like Globex traps, right? If you're already quite advanced or intermediate, then Globex trap may be something that sounds familiar. And then if you use this, it makes your life a little bit easier in terms of finding the Globex traps here as well. But I just personally like it neat. Now on the top, you see something like interval here. And on the intervals, what you can do is you can change the time frames, right? Where you can also change the time frames is right here. Under time frames, you can also change the time frames. The difference is under intervals, you have different options in terms of also share bars as well as minutes. We'll just look at minutes for the beginning. And on the time frames, you just have the minutes. A little bit of a shortcut here. If you, for example, want to go to a daily chart, what you can do is you just press .d. Now you can see we're on a daily, right? Let me just make this bigger in terms of the font. And the status line, I also want to put a 12 here. Now you can see the daily right here. If you want a weekly, you just press .w, enter. Now the chart will go on a weekly. If you want a monthly, you press .m, enter, and you'll go on a monthly. If you want, again, a weekly, you could also type in weekly, and you'll get a weekly. You could also type in daily, you'll get a daily, and you could type in monthly, and you'll get a monthly. So .m and monthly, you get monthly charts. .w and weekly, you get weekly charts. .d and daily, you get daily charts. Now, if you are on a daily chart or a monthly chart and you want to go back to a minute chart, so now I go 60 space minutes. Now it should work. And sometimes TradeStation may take a while to load this data. Here we go. And if you're within minute charts and you want to change the minute charts, then you can press, for example, 240 for a 4-hour chart. And here you don't have to put the min behind. Here you can just press 240, press enter, and it will work. And you can go to 120, and you can go to 1, and you can go to 5, and you can go to 15, and everything that's in between. And you can go to 960. However, if you are on a daily chart, what you can't do is I can press 60 and enter, right? Nothing will happen. If I want to go back to the minutes, I have to go 60 and minutes. Once I am on the minutes, now I can put 200, I can put 300, right? Whatever you want. And of course, I'll guide you towards the best timeframes to use for each of our steps of the processes. Now, there are a couple of things that also we want to do. How to navigate now on this chart? Well, if you want to navigate here, then, and you want to pull this chart, let's say to the left, then what you need to do is you need to hover over the candles, any of the candles over the chart. You need to press it, right? You need to press it, and then you can squeeze the chart over to the left. You can pull it over. If you press anywhere within the chart, you can see nothing is happening. But what is happening is that you see a little pop-up window. And that pop-up window, what it shows you is it shows you the open, the high, the low, the close of the candle. And it will also show you the up volume and the down volume. So that's quite neat to know that if you just hover, and if you press the left mouse button and you hover over those candles, then you see each and every candle and what the open and the high and the close is. However, if you go on the candles itself and you click on it and you hold it, you drag it, then you can go to the left and you can see how the window automatically adjusts right here. The thing is that once you play with the axis here, right, and again, you hold it and you drag, once you play with the scaling and the amplitude of price, then if you now are pulling it, now you can go all over the place, and now it will not go. Now it's not on an automatic scaling range. Now it's on manual scaling, which means that you can move it down, you can move it up. If you ever get lost, then to always go back to your automatic default setting, you can always right mouse click, reset scaling range, and now it's again back to automatic, and you can again pull it, drag it, and it will automatically adjust the scaling accordingly. You can also do the same down here, and you can move over with the cursor to go to the end of the chart. So you can see here now I can go much further. Right now I am in 2022. Down here you see the date 2022, and I can't go much further back. Well, what I have to do now is I have to load more data, right? Sometimes we want to load more data. Sometimes we want to see more things in the background. This will be important for our indicators as well to calculate properly. It needs a lot of data in the background that is visible to our indicators. And for the data to be visible, it needs to be loaded. It cannot be hidden. So to do that, we go to timeframes and we go to customize. So you can either do that through the right mouse click, timeframe customize, or you can go through the top function here, timeframes, and then customize. It's the same thing. This little pop-up will open, and now you can say how many years or months or days you want to go back in time. So you could, for example, put 5 years back. And now we have to wait for TradeStation to load all the 5 years. This little yellow PD, it means that data is being loaded at the moment as we speak. If I now go to the left, I should get further than 2022. Here's 2022. So we can see it's still loading this data. It may take some time until it's there. For as long as the PD is here, you know that TradeStation is working on it. It's trying to get you the data. Why it may take some time is because I'm on a 300-minute time frame. That is something that is a very unique time frame that is not necessarily quickly loaded by TradeStation. If you work on standard time frames, like for example on dailies, then changing those time frames, changing the years back is going to be very simple. So now I'm on a daily, and let's see how much we can go back. Now I'm going back all the way to, wow, 1999, right? So all this data just was loaded so quickly here on the Nasdaq. Let's say, for example, we have a case where right mouse click, time frame, customize. Let's say we have a case where we only have 1 year of data loaded like this. Then what you want to do is you want to go to time frame, customize, and you want to change this to 5. And now you can see this is happening a lot quicker because we're operating on a daily time frame, and a daily time frame is a more standard time frame than a 300-minute time frame. So TradeStation has an easier job to give you the data. What you can also do, for example, as a shortcut, you could say, well, I want to look at 10 years. So you type in 10 years, and now we have 10 years of data. Right now we have 10 years of data. So we go back all the way to 2013. You could say, well, I want 20 years of data. Now we have 20. Now you could say, well, I want only 1 year of data. You press 1, right? And so that would be the shortcut in terms of the historic data that you're loading into the chart. Now you may have noticed that Sometimes I'm increasing the space between the candles, right? Visually zooming into the chart. And sometimes I'm decreasing the space between the candles. Where you can change that is if you double click on the chart under general, there you have your bar spacing. So at the moment it's set on 5. However, what you can just do with your keyboard, you can press up and you can press down. And this is going to be important as you look at supply and demand. You want to look at a very tight chart so you see all the imbalances a lot better than if you, for example, have a lot of space between the candles and you don't really see a whole lot here that's going on. So you always want to use as little space in between the candles as possible. How do you do that? You just press the down button on your keyboard. So what else? Now we can navigate on TradeStation. We can change the amplitude of price. We can look further into the history, and we can load more history. We can change the time frames. We can see the opens and the highs of those candles. We can already navigate quite smoothly and easily on TradeStation. What we cannot do yet is draw, right? We need to draw in our supply and demand zones. And to do that, we're going to go to our drawing functions. Now, the drawing function, you should have an option here for drawing. If you don't have an option here for drawing, everything that you find up here, you'll always find by using your right mouse on the chart. The right mouse button on the chart, you have a time frame here, just as you have here. You have studies here, just as you have here. And you also have drawing here. So everything you'll find here as well. And now what you can see is, you can see not all, but most of the important drawing functions that we use on a daily basis. The most important one for now for you is going to be the Fibonacci price retracement lines. Okay, you have quite a lot of Fibonacci tools, but what we use is the Fibonacci price retracement lines. And what you can also see here is that I've created a little bit of a shortcut here, and I'll also show you how to do that. So if you press now on the Fibonacci price retracement lines, and you press on the chart anywhere once, then you move either up or down, you press again, then you'll see that now the Fibonacci price retracement lines are here. What you'll have as a default setting is you'll have many lines in between, right? And you have a different setting. Whenever you want to change the settings of anything, it can be quite self-explanatory if you spend some time on TradeStation. It's always the same process on how to find a solution. You just double click on it, and then you get your customized Fibonacci price retracement lines. Just as if I double click on the window, I get my customized window, right? And if I double click on the Fibonacci, then the customized Fibonacci price retracement lines pops up. And here again, we have our sub settings. We have the settings, we have alerts, we have labels, and we have data here as well. So on the settings, what you want is you want to disable the trend line, and you want to disable everything else that may be ticked. All you want is the 0 and the 100. And these you can change the color on. I have like a light gray here, and I also changed the thickness to just the second one here. And what you also want is you want them to be extended to the right. And then you want to set that as a default. In terms of the alerts, if you ever want to create alerts, you can do that, but that may be for a later date. Then TradeStation will send you alerts to your email address and or on the screen here, and it will make a noise so that it tells you, hey, price is coming near a demand zone. We need to go and we need to act on that. In terms of the labels here, you also want to change a few things. So again, I like to use 12 as a font size. Here you can play around with the size. What the font size will display is the price of those lines. So your proximal and your distal lines. And here you want to show price. You don't want to show the value, and you want to show the price on the right-hand side. So you select right justify, you deselect show value, and you select show price. Just increase the size of it a little bit, set as default, and press OK. If you ever wanted to change those data points, let's say to an exact number, you could always do that here. You could say, well, I want to have the proximal at 10,000 and I want to have the distal at 9,000. And you could press OK again, and then you would see it would adjust right here. So how do we place those lines now? Well, again, we go into drawing, Fibonacci price retracement lines. We press once and we press twice for distal. So the first time you press, you always want to find the proximal of the chart. And we will do that later once we do practical applications, but just already mentioning that. This is going to become important later down the road as you use these Fibonacci price retracement levels to also automatically calculate your risk and automatically calculate your reward. You can do that with the Fibonacci tool. However, you can only do that correctly if you always press the proximal first and then you press the distal second. Okay, so if you, for example, are drawing supply, and we'll do that later, then what you want to do is you want to use the proximal first and then the distal. A demand zone and a supply zone, how do we change those lines? Well, as I click on this tool here, you can see these two dots popping up and all these little dots here that are popping up. These two dots will be the dots that if I click on them, I can change those lines individually. So I can change the distal, I can change the proximal, but if I click anywhere else and I try to move it, I move the whole thing. So what you want to do is you want to always click on those little dots and you want to move those dots to move the lines individually. Same here, I click on it, I see those two dots, and then I want to move those dots individually, and I have to press those dots, and then I can drag them to wherever I want to drag them to. Now we also have a text. So for the text, I just use right mouse click, drawing text, and here we go. And then what we also have is we have these nice little boxes, and what they are just rectangles, right? And if you place a rectangle, don't click on it and hold it. Click on it once. Now move your cursor and then click on it again when you're done, and then it will appear. It will most likely not look like mine. Again, how to change the settings. You double click on the rectangle. Don't double click in the middle of nowhere. If you double click in the middle of nowhere, you'll get to customize window. Try to grab the rectangle. You can see that you've grabbed it as you see those dots now appearing. You can change this rectangle by clicking and dragging along the dots wherever you want them to. And if you now double click on those dots, or in fact, anywhere on the outer part of the rectangle, then you get into the settings of this rectangle or of this box. So here you can change the style. I have a yellow line and I have a yellow fill, and my fill is 80% transparent so that it's a little bit see-through. Otherwise, I wouldn't see some of the candles and the text that I may be writing there below. The data is really irrelevant, so you just want to change that. And again, I've seen people that are using other colors here, right? So for example, I've seen magenta as well. That works too. So again, just because I'm using yellow doesn't mean you have to use yellow. You can really have your own, whatever you like to see here, or maybe even blue. Blue may be nice here too, like a campus blue here, right? That may be nice. So again, drawing, rectangle, don't press and hold, click once. Now drag along, and you can see it shows you where the rectangle is going to be placed. Once you're fine with how you've got it placed, press the button again, left mouse button, and it will release, and you'll have that right here. And this is all we need for the moment. We just need one window, right? We just need to be able to draw demand zones and supply zones. And what also you may want to do is you may want to change the symbols, right? You may want to change the markets. So how do you change the markets? I'll show you in just a little bit. First, I want to show you how to create those hotkeys for these three drawings that we have in place here. So we have the Fibonacci retracement lines, we have the rectangle, and we have the text. So if you go right mouse click anywhere within the chart into the black space, can be anywhere, again, settings, hotkeys. And this window, you can see this window, I have two screens, so this window always pops up on another screen. I have to drag it into the screen. So if you don't find it, if it doesn't appear right in front of you, you can find it usually by just looking on other monitors or to the left, to the right. Now you have all these different things that you can create shortcuts on. For now, we just want to create shortcuts on our drawing tools. And we want to create a shortcut on our Fibonacci price retracement lines. And how to do that, you just press in here, and then I have a Control F. So you press Control F, and then you would press assign. I can't assign because it's already assigned to me. And then you would close it. Then you have a shortcut here. And then you would, again, right mouse click, settings, hotkeys, go again in, you go to drawings. And now you want to create a drawing for text here. And what I have is Control W, because I'm basically saying I want to write something, right? And so I have Control W, and you press in here, Control W, assign, there you go. And then for the rectangles, what I have is Control B. Again, you press in here, Control B. That is for the box, right? Control B. And then you assign, and then you close. Then I just press Control F, and you can see now my cursor changed, and you can see these horizontal lines here. This means now I can draw the Fibonacci as I press once, press twice. Now again, you can see the cross here. The cross means I don't have a drawing on at the moment. Now I could press Control B. Now you can see there's a little rectangle here. That means that I can now place my rectangle once, twice. And now again, I have the cross. I can just navigate. And if I now go Control W, you can now see it's the classic word writing symbol icon. And now I press on it and I write. Let's go. One thing also to note at the bottom here, you have something that mimics the down button. So changing the space in between the candles, decreasing it or increasing it. So that's the up button, that's the down button. And we can also zoom into certain things by clicking on the zoom in. And then we could then zoom out again, but I don't usually use the zoom settings. And this is the reset automate candle view setting. Your chart may also not be candles in the beginning. If for any reason your charts are not candles, then on style, you can change the style of your candles. So there may be candles with trend, OHLC, and line. You want to use the candle right here. So that may be something that happens from time to time. It depends really on the TradeStation update that you may be working on. How do you remove those damn things again once you have them? Well, you can either right mouse click, remove, or you can press on it and then press the delete button on your keyboard, press on it, press the delete button on your keyboard, or you can right mouse click, drawing, remove drawing objects, select all. I warn you though, if you do this and you select all and you remove everything, there's no Control Z, right? There's no going back function in TradeStation. So if you mess something up in TradeStation, it's here to stay. Okay. If you have done a beautiful drawing on a chart and you go and you want to remove something and you do remove drawing objects and you select all and it's gone, there's no way to get this back. It's just gone. Okay. There's no Control Z. There's no going back. So how do you change now the symbols? Well, you just override it. Now I'm looking at NQ, which is Nasdaq. There could also be at ES, which is S&P. There could be SPY, which is the stock symbol, ticker symbol for the S&P. You could look at Apple, AAPL. You just type AAPL. There could be Tesla right here. Now you may ask, well, how do you find those symbols? Well, TradeStation actually has an option for you to find this here. So data, edit symbol. On your data edit symbol, you could type in anything here. You also see whatever you typed in the past, for example, and you could look up certain things. So you could, for example, say, I want to find the symbol for Apple. Now you would see, well, there's quite a few. Of course, you're going to take the one from Nasdaq Exchange. You could also Google the ticker symbol that's usually used, and TradeStation uses usually the default ticker symbol, especially for the US companies. All right. And so, for example, if you say, well, you don't know yet what is Amazon, then you type in Amazon, then here you go. Amazon, or you want to trade gold. Now you're going to get a lot of different symbols for gold, right? And the problem is that we don't use any of those symbols. As I mentioned previously in one of the lessons, is that we look at future symbols to analyze our charts. Why do we look at future symbols? Because we get the COT commitment of traders report through accessing the futures data, and the futures data is the one central exchange where all institutions go to buy and sell, right? That's where they meet and that's where they trade. So here you will not find future symbols, especially not if you're on stocks. However, if you're on futures and you type in gold, then you may get certain things here, but you still get a lot of things. And for the most part, what you'll get is you'll get the months and the year specific contracts. So you also don't want that. That's also not going to help you quite a lot. Here it will be at GC. So what you want to look at is you want to look at the continuous contracts always. Here you have other continuous contracts. This is the 100 ounce. The standardized gold it would be this in this case, but there's no way of you knowing that it's that it's not the mini, that it's not any of the others, right? And so for crude oil, for example, Now there's no way of knowing that it's crude oil continuous contract. You're always going to be safe if you just use the continuous contracts. If you don't use here they should have minis as well, right? They have e-minis as well. They have other types of things. They have Brent. If you always use whatever it says, crude oil, and then the continuous contract, wherever it was, I don't find it right now. Symbol, here we go, crude oil, here we go. This is the right one. And so there's a way for you to find those symbols on your own by using this here. And there's also a way to use, for example, future Forex pairs. If you, for example, want to trade the euro, and then you see all the different euro pairs that are available, or you want to trade Bitcoin, what's going to happen now? Well, data request failed. Well, because it's not under Forex, Bitcoin would be under futures, right? So if I put in Bitcoin now I get at BTC, which is Bitcoin futures based continuous contract. That's the one that we want. There may be custom futures, but that would be going too much into detail already. What you really want is futures, stocks, and Forex for now. Okay. And if you want to find something, you can find, and you don't know the ticker, you can find it right here. So again, I'll do one more example. Google. My own stocks, description, Google. Okay. Alphabet. Okay, here we go. So Alphabet is the description here. So maybe also a bad example. But with time, with the combination of using Google and using this, you'll find all the different symbols that you may want. And then you can just press OK. And now it's there. And then you can press OK again. And now you can see the chart is changing here as well at the same time. Now, what you don't want to do is you don't always want to manually type it in, right? You want to create yourself a radar screen, a watch list where you have all of your favorite products and markets in one window. So how do you do that? You can go to apps, and then you can go to radar screen. And your radar screen, here you see symbol. So here now we could type in @ES, which in this case would be the S&P 500. So this radar screen is not very useful as is, the default setting. What we can do is we can just make it a bit smaller. And you can now see, hey, where's my window gone? Well, it's down here. What we can always do is we can press on window, arrange all. And it should, well, if it's maximized, it should arrange them. Yes, here we go. If I press on this, it goes first and then it comes first, arrange all. If I press on this, arrange all, it comes first, right? I could also say, I want to arrange it horizontally. I could say I want to cascade. And I could say I want to arrange it like that. Okay, I want to arrange it like that for now. And what I want to achieve is that if I click on this, I want this chart to change. Okay, so how do I do that? I can now link those two. So as I press the S here, I can now create a local symbol link. And with this local symbol link, as I click on this and I create the same color local symbol link, these two charts are now linked. Well, this radar screen and this chart is now linked. So if I press on @ES, you can see the chart changes to @ES. So what we want to do first is we want to right mouse click, studies, and then we want to edit all studies. Okay, so what we want to do is we want to get rid of a lot of these things. We don't need bid, we don't need ask, we don't need the high, the low, the volume. All we want is, even the interval we don't need. We just need the net change and maybe the net percentage change. And maybe the last price is something that we could have here as well. So if I look for L, here's the last, I could add it back. And what I want for you as well is for sure, if you press on D, the description. So you add the description, that goes up, and then the last goes up as well. Press OK, and now we can see we just have the symbol, the description, the last price. The last price should be in line with the last price here. Then we have the net change today and the net percentage change, well, of the time frame that we're looking at. So right mouse click, time frame, and change that to daily. And now you make sure that all these are also based on daily. So again, right mouse click, time frame, and daily. So now we have at ES. Now type in at NQ, and you can see at NQ is going to be Nasdaq, and you can see this window changes right away. Type in at YM for Dow Jones. And what we've just created is we've created a category of equity indices, right there. Dow Jones, the Nasdaq, the S&P, they're all equity indices. So now what we do is go to data and we add a label row. And that label row, we can now give this a name, equity indices. Again, I can click on this, data, add another label row. And now I could say, well, let's add some precious metals, right? And here you would add at GC, you would add SI, you could add at PL for platinum and at HG for copper. And again, you always have those descriptions here. Again, data, label row. What about energies? What about at CL crude oil or at NG natural gas? Here you have them. Then you could say, well, what about I want to trade Forex? Well, Euro USD, Aussie USD, GBP USD, New Zealand USD, and so on and so forth. Euro, GBP, USD, JPY. So again, you can use the lookup function on TradeStation. Then lastly, you could say, for example, well, I want to look at things like Bitcoin. You could say at BTC. You could say at W for wheat. You could say at LC for live cattle. So you can see there's quite a lot of things that we can look at. And then lastly, you could say, well, I also want to look at some stocks potentially. So then you could look at Apple, you could look at Tesla, you could look at Google, you could look at Amazon, or what else is there? Microsoft. You could look at IBM. You could look at anything, right? Anything. So now you have a radar screen, and that radar screen is linked to your price charts. And if you are drawing something into your price chart here into the Aussie, for example, you're drawing something in. I drew this just now, and you go to another product, to platinum. And of course, in platinum, it will not show this, right? But if I now go back to the Aussie, then it's still there. And that's the beauty about this setup, is all your drawings will be saved in the back end. And now if I go on HG and I draw something and I go back to Aussie, then this is still there. If I want to remove this, okay, and you click on drawing, remove all, select all. Okay, now, since I removed all, I also removed the drawings from at HG. Okay, so if you have this window set up and you wanna eventually remove some lines off of your charts, then never use the remove all function. Unless you really want to remove all the lines and all the drawings that are loaded in the backend. Always remove them individually. like this. We're using delete on the keyboard, or right mouse click, remove individually. Tina, yeah, I can show you again how to link the radar screen with your chart. If you click anywhere within the radar screen on the top right, you have these two buttons here. The S will create a local symbol link. And here you can create an interval link. You don't really want the interval link, because what the interval link will do, it will link timeframes with one another. Okay, so for example, if eventually I have two windows here and I want them always to be the same time frame, then I can link the intervals here as well. Like I always want them to be dailies. I always want them to be weekly, so that I don't have to change all my windows at the same time in terms of also the time frame. For now, we'll just use this one, which is just a symbol link. Okay, we can have a local or a global. Local is based on workspace. Global will be based on across desktops, which for now we just have one desktop and we only need one desktop, but there may be reason for you to have two desktops in the future, not something we'll go into now. Long story short, green local symbol link. And then on the chart itself, you need to put the same color local symbol link. So green local symbol link. Now those two are linked. So now if you click on anything, it should work also from your side. And let me know if it doesn't, then we can take a look at it again. Zina is asking, can you also please show if we can link the same radar screen to charts across more than one workspace? We can try global link. So if now I use a yellow global link here, then whenever I use this same yellow global link, let's use it, for example, on here, it doesn't matter. This is what I always play around with. So let's also put here a yellow global link. Okay, so here I have a yellow global link, and then here I have a yellow global link. So if I now change this on copper to copper, then we should also see this here change to copper. And yes, it does. So if you create a global link, it will go not just across desktops, it will go across workspaces and across windows. And so you can have a lot of different color combinations. And if you stay on local, then local just basically means the desktop that you're on and the worksheet that you're on, nothing else. And you can see I have green here, green here. I have green here all over the place, right? And here I'm not on copper because here I just have a local link. And I also have a radar screen here. Right? And so you can see it's the same. I have more windows and I have more capability within the things, but we'll get there eventually as well. One last thing on the radar screen, I would say, and that again depends on what your setup is. But if you go to data, if you go to settings and you go to page, then what you can do again is you can give your page a name. Right, so down here it's page. You know, if you want to use a global link, you can name it your global radar screen. You can name it your local radar screen, or you could also just say watch list, for example. And now you can see the name change here. Again, right mouse click, settings, page. I can change the font. Again, I like 12, right? I like 12. The headings as well, 12. Change the colors. We could have a grid, or we could not show those horizontal lines. We could not show those vertical lines. We could say, well, how do we want to sort them? And so if we do this, for example, then you can see there's no grids, there's no grid lines. It's a lot bigger now. It's a lot more user-friendly. And you can play around with this as well. For example, if you say, I don't want this, you just click on it, you remove it. You want to add something, press on the add. Add study should pop up. which it doesn't in this case. Does it pop up somewhere else? No. Well, how else can we get the add studies? Well, study, add study. And now I also could get it back in just looking for it here. And then eventually, I'm not even sure which one it was anymore. Anyways, you get my point. I don't necessarily need this. I don't necessarily need that. And I don't necessarily need that. There'll be other things that we can add here that'll be very useful in the future. Now, always make sure that you right mouse click and you save your workspace. Always make sure that you right mouse click and you save your workspace. If you by any chance press the X, okay, don't panic. Always just press cancel and never press this. Do not display this message again, right? You always want this. This is your backup message, because if it's removed, I cannot again press Control Z. So just press cancel and nothing is going to happen. If you minimize, it will be down there. Again, we get it back up here. And then you could, for example, say, well, I don't need all of this black space. I just need that here. And then I drag it over to here. And now I have a beautiful watch list and one window with shortcuts and so on and so forth. Okay, so far, so good. Are there any questions in terms of the drawing functionality today that you guys will need to have access to? Amazing. Great. So let's move on. We covered half of today's lesson in a TradeStation tutorial. And the other half, let's designate that to our practical applications and a little bit of theory and translating the theory into practice. There's one more question from Zina. You don't have the apps. You don't have the apps here. Okay, they should be up here maybe somewhere as well. Let's see if we can find them. Yeah. So under view, here's your trading app launcher. So if you click on that, the same thing should open up here. Trading app launcher, the same thing opens up. If it's there, you can get rid of it. Press here and then auto hide, and then it will auto hide again. I think this may be one of the few things here where you could change the toolbars here or the shortcuts, but I'm not quite sure. I'd have to look into that, how to have it displayed, but that should do as well. So your last resort is always up here somewhere if you can't find something. Application toolbars here, probably if you hide all, then this would also probably hide here. All right, back to our practical applications. Last time we spoke about demand quite extensively. Let's also talk about supply. And if we can, let's make 2 examples today. But before we make those examples and those back tests, translating the theories into practice, let's quickly talk about the theory here as well. This is where we ended last time. Demand zone, the rally-based rally. And if you want to, again, look at our demand and our supply zones for a second, then we looked at the drop-based rally and at the rally-based rally. We identified them within the chart using our 3-step process. What we can do next is we can look to identify supply. So our rally-based drop and our drop-based drop. And what you'll notice is they're just de-inverted, just different colors within the parts of the candles. And what's most important is that our leg outs on demand, they have to be large green candles, and our leg outs on supply, they have to be large red candles. So they're just de-inverted. We're looking for the same things, just different colors. Okay, we're looking for the same things, just different colors. So that should make our life a little bit more easy. But let's go to our supply zones now, starting with the rally base drop. And again, there's going to be two versions here. There's going to be the wider version and there's going to be the preferred version. The difference again is the trade-off between probability of getting filled. This is a much bigger zone from proximal to distal than here from proximal to distal. On the preferred, this is much smaller. Hence, if price comes back and travels away from the zone, price has to travel a larger distance than it has to travel here to get the same risk to reward proposition, because your -1 risk is going to be from proximal to distal, right? So the larger your area from proximal to distal, the more price has to travel away from the zone for you to achieve a decent profitability. The smaller the zone, the less price has to travel away from the zone. However, the trade-off here is that if you make a very small zone like this, then what are the chances of us getting filled, right? So it's always a trade-off between, hey, I want to be in this trade, and when I'm in the trade, I want that to be decently profitable. So on the wider version, now our proximal goes at the lowest wick of the basing candles, okay? And our distal goes at the highest wick of the entire formation. That means if my wick is here or my wick is here on the leg out or the leg in, then my distal also changes. And what you can also see is that the distal rule on the wider and the preferred is the same. It's the highest wick of the entire formation. So that's what they have, and that's what the distal is, what the preferred and the wider always have in common, also for demand. What changes is the proximal. Okay, the proximal is what changes. And on the wider, it's the lowest wick of the basing candles. The lowest wick, because then we have a very wide zone. And on the preferred, it's the lowest body of the basing candles. And that would put the line here. And then that would make the distance here a lot smaller, hence more profitable as a result. What do we do if price comes back? Well, if price comes back, then we have our entries. We have our stop loss. And we'll have a target placed where we have decent profitability. So we would act as price would come back into the zone. Worst case scenario, we're being stopped out. Best case scenario, price is traveling towards our target so that we can collect some reward. So again, the distal line is drawn at the highest price of the entire rally-based drop. So here we're really using the entire formation. We're using the leg in, the base, and the leg out. And the proximal, if we look at the preferred, always goes at the lowest candle, the lowest body of the basing candles. Okay, that's the preferred. And the wider would go to the lowest wig of the entire base. So let's make a little bit of a practical application here. So now I'm looking at gold on a monthly chart, and the starting point for us is always current price. And do you see how I'm making the chart, how I'm pulling and dragging the chart first to an area where I can really work with it, right? Because it was like this. And if it's like this, then it may be more difficult for me to spot. I really want to drag this chart to an area where I can also visually see the zones to the best of my ability. And what you don't want is you don't want a view like this, and you potentially also don't want a view like this, even though that's better than the first one. You want a little bit of a mix, especially in the beginning, maybe like this. And now you can see all those candles isolated, but you can also see the big picture. That's very important. I don't want you to just get a magnifying glass and isolate each candle. I want you to have both a sight on each of the candles and a sight on the big picture as well. So the starting point here again is current price. So we identify current price. Now we know that as we looked at demand, where we were looking below current price and to the left, not crossing candles until we found a explosive or decisive green candle. Now, if we want to find supply, we're going to look above current price and to the left. So our step one is look above current price and to the left without crossing candles. Now, what does it look like not to cross candles? Well, if I'm going here, then I have to go horizontally to the left, and I would end up here at this candle. I cannot move up this candle and then all of a sudden I'm here. I can now not go down diagonally and look at this candle right here. That really doesn't work, right? That means I would be crossing. Going diagonally is always crossing. And going horizontally is you're looking to the left, okay? So we look above, to the left, not crossing candles until we find a decisive or explosive red candle. And here we could now say, well, there's not really a decisive nor an explosive candle here. Well, there's very large red candles, yes, but there's not really a decisive candle that would meet my set of rules. Well, if this was the wick of the candle, then I think it would be very easy for us to say, whoa, this is for sure a decisive candle. And it's also from close, from open to close, it's also quite large. It's a large candle. So it's potentially abnormally bigger than the candle bodies of the surrounding candles, which in this case, it's quite similarly sized, but they're quite big, which means it's quite decisive, a lot of selling action, a lot of willing sellers. And so therefore, if there were no wigs, then we would isolate this candle, then we would say it's decisive. Now, all of a sudden, if I see this wig, now I'm saying, well, it's not decisive anymore. There's something wrong with that too, isn't there? Okay, now we're speaking about a little bit of a gray area and me not wanting you to over isolate each and every candle. We always have to look at what we're trying to achieve here. What we're trying to achieve is we want to find a formation. We want to find, in this case, a rally, a base, and a drop, where the rally should consist of green candles. The base can consist of any candles, but they have to be indecisive. And the leg out, it should consist of red candles, decisive red candles. In the context, if we look at this on a monthly chart, it's 1, 2, 3, 4, 5, 6. 6 monthly candles, half a year, month after month, where price goes consistently down. Okay, so overall, as I'm now looking at the leg out of things, what I'm doing is I'm not just isolating one candle, and I may isolate also the next candle. What I'm doing is, yes, I'm looking at those candles and I'm making sense of those candles, but I'm also looking at the overall formation and structure of the formation. Okay, so we're looking at both, and we can put some importance on both. What's more important is this. Okay, the larger context of things is always going to be more important than over-analyzing and isolating specific candles. Okay, over-isolating in specific candles and having scientific rules for those candles, in my opinion, does one thing for you. It trains your eyes to look at certain things that I want you to look at. And to make your life easier, you get a set of rules. And that set of rule can be 100% scientific, objective, and mechanic. And maybe it should be in the beginning, but as you advance as a trader, you should move away from the science, because the science is just put in place for us to make you train to look at certain things, to train your eyes, and move away from the perfect textbook supply and demand zone to the imperfect world of trading real charts, and make sense of the imperfect real charts. And how do you do that? Well, you put your trading experience into the chart, which you cannot yet, right? Because you do not yet have trading experience. That will come with time. But what's very important, going to be always very important, is that we look at the big picture and we don't over-isolate. So in the context of things, I would now argue that this is a decisive candle. Okay, it's a large candle. Yes, it has large wicks as well, but there is a lot of selling pressure. There's a lot of willing sellers. And then there's continued willing sellers and continued willing sellers and continued willing sellers that drove price down months after months after months. So in this case, where is the origin of all of this leg out here, of all of this leg out here? Well, right, that's step number one. Step number one. Where's the origin here? Well, the origin we know is in the base. And how do we put the base? Well, we need to find the base. And in finding the base, we also need to find the leg in. So let's update this. Step one, look above current price and to the left without crossing candles. And what we're trying to find is, until you find the first decisive or explosive red candle, that is your leg out. And then step 2 and 3 is find the base and the leg in. Okay, so in finding the base, I now need to look at if this is my, this is also what we need. We need the vertical line. So I can put the vertical line on my leg out. So I'm going to write all of this now down very thoroughly once. Okay, so leg out, and then place a vertical line on your leg out. Okay, the vertical line is drawing vertical line. To create a shortcut, go to settings, hotkeys, drawings, and then what I have as a shortcut is a Control V for vertical line. So here you can double click on it and then also change your vertical lines to be whichever color you want, right? So you could change it to be white for now, then it would be white. So here we go. That's now my vertical line on my leg out. Now I know that now I have to find a base and a leg in. So I have very large monthly candles, and they are large bodies, but they're also large wicks. So in terms of the body to range ratio, they could be indecisive candles, right? Because yes, the bodies are large, but the wicks are even larger. So the body is smaller than 50% of the entire range for sure. So that is an indecisive. That is an indecisive. Where's my leg out? My leg in. Well, my leg in it's not a drop-based drop. It's a rally-based drop. So my rally, again, this green part, that's right here. And I put another vertical line on my leg in. So place another vertical line on your leg in. Okay. And in doing so, you isolate the base. So now we have the leg in, the rally, the leg out, the drop. And now I have two candles left, which is the base. And I have isolated the base. So I now know these two lines. I now want to put some lines around that. And so here, that's two. That's two. And now on 3, we have our set of rules. We start with the proximal. Okay, the proximal on the preferred goes on the lowest body of the basing candles, and the distal goes all the way to the highest wick of the entire formation. So in this case, this is the highest wick of the entire formation. And so I put my wick, I put my distal line here. If I was to put the wider version, then I have to use the lowest wick of the basing candle. Okay, so again, wider versus preferred. I just changed the proximal. So here I have a proximal, preferred, and that's the lowest base of the basing candles. And my distal is the highest wick of the entire formation. So the entire formation always means including leg in, leg out, and base. And so now what I just did by putting the box around, now I did part 3. And in doing so, I now have a beautiful rally base drop, which is a supply zone. So as the next step, when you isolate the base, you use the Fibonacci price retracement lines to create or to draw both, use the Fibonacci price retracement lines to draw both the proximal and distal line. Note that proximal should go first and then the distal. This is going to be later to calculate your risk to reward propositions automatically. What did we miss? What did we forget? Create a box and place it into the base. This shows the origin of imbalance. Why do we do that? You may say, well, first of all, it looks quite nice. Secondly, as we advance and as I introduce more and more steps, there's going to be more and more lines within your charts. So if I'm going to have a lot of lines within my charts, you always want to know, hey, which lines represent my proximal and my distal, meaning which lines represent the origin of imbalance and where is it exactly. By coloring it and having a lot of lines in your chart, you always know, hey, this is my origin of imbalance and not what are in between those two, right? Maybe here's your origin of imbalance, and then these are just other lines, and then here's your origin of imbalance. And so this always will tell you which lines are actual supply and demand zones and which lines may have another purpose, because there's not just one purpose for a horizontal line. All right, so what we now can do is we can say, well, if price is here and here's supply, then generally speaking, what we want to do is we want to be sellers as price comes back into this area. And we would also expect price to decline out of this area. From where exactly is that going to happen? Well, that we don't know, right? Where are those unfilled orders going to be? Well, they could be anywhere, right? They could be here. They could be here. That we also don't know. They could even be within the wider version. They could be here. We don't really know that. But what we do know is that if price is going to get into this area, we should expect a bounce. Okay, so what we can do is we can now go into the future. In this case, we could look at today. And what you can see is that the level that we put into place, rally-based drop on the monthly, as price came into the zone once, twice, the willing sellers came back into play. And because at this area, we have more willing sellers than willing buyers, laws of price, more willing sellers than willing buyers, price declines as a result. Now, we could probably agree that if we were to trade it with an entry here, and a stop loss here, that for us to achieve a decent risk to reward proposition, if this is our -1 risk size, then price has to travel the same distance to reach 1R. So price has to travel this distance to reach 1R. Then price has to travel again this distance, roughly, to have overall 2 Rs, right? So for us to just achieve a 2-hour, whoa, price would have to travel so much further to the downside. And since this is very unrealistic, based on this scenario, we would not have a very good risk to reward proposition. However, what we do have, and that's something that we will talk about a lot, is we're on the monthly, on a very high time frame. The monthly is very good at identifying where major turning points may be in the market, okay, where they may be if the fundamentals align with that. So higher time frames can be used to identify higher time frame turning points, okay. What we then use the lower time frames later on for is to potentially find an area that is going to be smaller. I may have a drop-based drop on a daily, where then I have a much better risk to reward proposition if I was to trade a lower time frame that is going to be covered by the higher time frame. But I don't want to jump the gun at the moment. I'm probably going a bit too fast. I'm getting ahead of myself here. But on the higher time frame, what you'll notice is, as we spend time on the higher time frame, is not all supply and demand zones will be zones that we actually place. Okay. Not all supply and demand zones are zones that we actually place. Some supply and demand zones, we'll put it into the chart to give us some higher time frame context about the chart. Hey, where could price potentially turn the trajectory from rallying to declining? Well, somewhere here. Okay, great. Now we can go to the next step and potentially find something more profitable to trade from this upper area. Now, one last thing. Let's drive this home with the last supply zone. There's a question. Bash, was the target for that still the gap below? Yes, that's still the target for gold, right? Gap fill, monthly gap fill below. So let's move into the last formation, which is the last supply formation as well, and the last of our 4 formations. That's the drop-based drop. It's like the rally-based rally, but it consists of red candles here. And again, there's a wider and a preferred version. Now, the wider version looks like the following. The proximal goes at the lowest wick and the distal at the highest wick in the base. Okay, in the base. So the distal may change depending on where the lowest wick is, the highest wick is. Okay, the highest wick of the base, including the leg out. Okay, so if the highest wick is here within the base, if the leg out doesn't have a long wick out reaching the basing candle, then that's fine. If there's going to be a wick here on the leg out, then we'll take that wick on the distal, regardless of whether we're looking at the preferred or the wider version. Again, the distals are always the same on the widers and the preferred. On all of our supply and demand zones, what changes is the proximal. And on the proximal, we either take the lowest wick of the basing candles, or we take the lowest body of the basing candles. So by taking the lowest body of the basing candles, our zone becomes a lot smaller. Therefore, our risk to reward position becomes larger. By taking the wider version, our zone becomes much larger. Therefore, our profitability slightly less, as price has to travel a lot more distance to reach the same risk to reward position. However, I have a much better chance of getting filled if price comes back. So it's again a trade-off between probability of getting filled and profitability on the preferred version. Distal the same, proximal changes. Either we take the wider, the whole candle, or we take the preferred. We just take from the lowest base to the highest wicks of the basing candles, and the distal, we also take the leg out, the wick of the leg out as well into account. So here's what a drop-based drop may look like. Okay, we have 3 candles in the base. We have a large drop here. And if we are going to draw the supply zone, the preferred supply zone, then we draw the proximal line first. It goes on the lowest body of the basing candles. And then we draw the distal line. I have the distal line. If there's a large wick on the leg out, then we have to take this into consideration. If there's not, then we're just going to put it on the base. So the distal line is drawn at the highest price of the base. That is including the leg out. And again, the proximal line is drawn at the lowest candle body in the base. So let's do one more example on this before we can call it a day. So at the moment, we're looking at euro. So we've looked at cross markets. We're looking at euro now. Lastly, and we're looking at supply again. So to find supply, I'm going to look above current price and to the left, and I'm not going to be crossing any candles. And the first decisive candle that I see, well, let's talk about the first red candle that I see is this here. And this is not a decisive candle. I think we can agree on that. The surrounding candles in terms of the bodies are larger. There's also body to wick ratio is quite small, probably lower than 50%. So that's an indecisive candle. So I look up and I look to the left. And if I look horizontally to the left, then I go straight here. And this right here is a decisive, if not explosive candle. Okay, so what I have here is I have an explosive candle. So it's not just decisive, it's explosive. It means there's very little buying pressure here. What I also have, again, we now have a drop, base, drop, and the drop as well as the drop here, the leg in and the leg out. They should consist of red candles, but the most important leg of all those parts is the leg out. So it should consist of ideally explosive candles. Here I have an explosive candle, so I have one explosive candle right here, and I can over isolate that candle, and that's already as per the rules. That's great. But what else do we have? We have another explosive candle right following that. So there's lots of follow through here as well, which means that there's basically no willing buyer at all. Or there were willing buyers and there were just so many willing sellers that the willing buyers became zero and absolutely canceled out. Now, if the willing buyers were canceled out, that's very interesting. Now we want to find out what's the origin of where they canceled out, where they were originally canceled out. And that's usually within the base. So the base, they now can be any candles, but they should be indecisive and ideally indecisive as per the body to range ratio. But most importantly, it should be small candles. Okay, so what we can see, you can see a basing candle here. It's a small candle, and there's a nice wick to candle ratio, range to candle ratio, and this is another indecisive candle here. And then what I have again is I have an explosive candle. So I have explosive leg in, base, explosive leg out. So drop, base, drop. So what are my steps? My steps are, first, I'm going to put a vertical line on my leg out. Then I'm going to put a vertical line on my leg in. Now I've isolated the base. Now I put my proximal and my distal around the base. following the rules. Again, I could now do the preferred or the wider. We're going to do the preferred as a default setting. We're going to start with that. So we're going to put the proximal at the lowest body of the basing candles, and we're going to put distal at the highest wick of the basing candles, including the leg out. Okay, so that's different from the rally base drop before, is that the distal is the highest wick of the basing candles. And here we go including the leg out. Okay, including the leg out. Remember, on the rally base drop, it's the entire formation. Here it's just the base and the leg out. Okay, so if on the leg out I had a large wick, I would cover myself with that large wick as well. The proximal here is the same rule on the preferred as well as on the wider, rally base drop and drop base drop. Now I put a beautiful box, and this is now a drop base drop supply zone, and this is a textbook supply zone. Now, why is this a textbook supply zone? Because the structure of it is very quality. The structure of it, as in the base, as if I have drawn the base, as if I have drawn the leg out. I could have not drawn the leg out better than that. And the leg in is always also non-arguable, so non-debatable, right? And very rarely we find zones within the chart, especially on the monthly chart, that are as textbook as that. If we find them, we definitely have to pay attention to them. They are real game changers. And again, what we do is we would argue that if fundamentals align up here, price should turn direction here. Why does price turn direction here? Well, in the past, we can see that the willing buyers were canceled out. There were so many willing sellers that there was no willing buyer, and price just declined. So there have to be potentially still willing buyers, willing sellers up here, because they perceived that as cheap before. They're going to perceive that as cheap again. As price rallies into here, again, we're selling into a rally. As price rallies, there's going to be an excess of supply up here. There's going to be willing sellers that outweigh the amount of willing buyers. Okay, so excess supply up here. The higher price goes, the more willing sellers. The higher price goes, the less willing buyers. That's laws of price. So we never chase price, right? The higher price goes, the less willing buyers, the more willing sellers. And in a supply zone, that's the origin of where we can pinpoint most amount of willing sellers and institutional activity. And therefore, if price goes up here, we would be willing sellers. So now I could go a couple of months into the future. And what we can see is, oh, price goes into our supply zone and it's penetrating our supply zone. And now we may say, whoa, everyone is going to say, what are they going to say? They're going to say, the euro is back. Everything is great. Everyone should buy the euro. The euro has rallied for 1, 2, 3, 4 months in a row. Everything is good. What do we know? Prices in supply. Eventually, if the fundamentals align, this could be where price changes its direction. And that's not going to happen tomorrow. That's not going to happen in a week. It's a monthly zone. You always have to think of it in terms of accumulation and distribution and institutional buying and selling power. And they take a long time to get their orders filled. And so this may take weeks. This may take months. This may take sometimes even years. And so Looking at the monthly, we know that within here, we should at least get a little bit of a bounce, right? And so what we are going to do, we're not going to buy, we're going to sell. We go again 2 months into the future. And now we can see, there was some selling pressure coming in. Price comes back again into the proximal. Sellers come back in, drive it lower a bit. And now price has spent 3 months within that supply zone. So there's order filling that's going on for 3 months. Now again, we're going to move 2 months. Now we can see after the 4th month that the sellers have won the battle. There was an excess supply. There were more willing sellers than willing buyers, and they eventually drove price lower. So it's the unfilled orders, or it's the willing buyers and the willing sellers that drive price. It's not the filled orders in terms of the candles that we see that drives price. Okay, very important. It's what we don't see really is what drives price. And that's what we have to identify. And on top of that, we'll identify bullish or bearish fundamentals to back up our higher time frame supply and demand zones, to have a higher probability of there still being willing sellers, because as it stands, we don't know, right? But if there's going to be bearish fundamentals here, then we know that we never know, but we then have more probability that there are going to be more willing sellers here. And then price declines. And as price declines, what happens as a result is, well, now we could say, well, let's check supply and demand. Well, we could say supply, I go above current price until I find the first explosive, decisive red candle. Hey, here's one. Okay, where is the base? Well, here is a basing candle, and potentially this could be either a base or an explosive candle, a decisive candle, and then here is a rally. So what we have for sure is we have, in terms of formation, we have a rally, we have a base, and then we have a drop. Now, the drop is the most important part. That is very clean. The formation is also visible. What I don't like is the base, because the base is not really indecisive candles, right? The wick to body ratios are not really scientifically accurate enough. Well, they're not scientifically accurate enough, but price has been basing for 2 months, and we visually see the formation. So visually seeing things is oftentimes more important than over isolating those candles. So what we can do is, well, we can now use these 2 candles as a base. So we have a leg out here and here. We have a leg in. We have 2 candles in the base. We have a rally base drop. Now the proximal goes to the lowest body of the basing candle. The distal goes to the highest wick of the entire formation, right? And we have new supply. And then if I look below current price, then where's my first explosive green candle? It's right here. Okay, do I find a leg in and a base? These are all explosive candles. Wow. And then I finally have a basing candle here, and I have a leg in potentially here, but I also may have a leg in here. So I could now argue, well, what I'm certain about is I have a leg out here. What I'm not so certain about is where's my leg in? Well, it could be here, then it would be a rally-based rally. It could be here, then I have a drop-based rally. What's the difference? Not so much. There's not going to be so much difference, because our proximal, right? Let's use a rally-based rally. Our proximal goes at the highest body of the basing candles. In this case, this is a basing candle, even though it's quite large, right? But in the context of things, this could be our basing candle. And our distal goes at the lowest wick of the basing candles, including the leg out. We would put it here. So this would be our rally-based rally. If we would have a drop-based rally, then our proximal goes at the highest body of the basing candles. Hey, it's the same. Base, 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 base. And our distal goes, this will change to the lowest wick of the entire formation. So what is better, the one before or this one? Well, probably the one where you have slightly more coverage. It's the safer one. There's no better one. There's a safer one. It's maybe a slightly more aggressive one, but we, in essence, are capturing, in terms of the area of the chart, the same area, right? It's just visually looking at it from a different angle. Both will be correct. Oftentimes, there will be times where you could argue both: drop base rally, rally base rally. Now, you can also see that I took this green candle that could be an explosive, decisive candle within the base. And that is absolutely fine if I place that candle within the right context of that candle is within that base, right? And so price is basing here. It's going sideways. And I don't care if one of those candles is green or how green it is or how large the wicks are. I care about it, yes, but I care more about that thing as a whole, that thing as a whole, and that thing as a whole, where this has the most importance. This has the second importance, and this I really care least about. So with that now, we could now say, well, if price goes up, we want to be a seller. If price goes down, we want to be a buyer. If price is in the middle of nowhere, we don't want it to do nothing. And that's now the last thing. We're going to take a look at what's going to happen. We're going to follow price a little bit. Let's again move 2 months. Nothing is happening in 2 months' time. Let's move 3 months. 1, 2, 3. Price is going lower, but again, nothing much is happening. Now, let's go a little bit further in time. What we can see is that price went all the way down until it finds demand. How deep is price going? Well, we don't really know, but now we can see, well, there's finally some buying pressure coming into play again, right? And so what's going to happen as a result is more willing buyers than willing sellers. Technically speaking, price should rally. And so price does rally all the way into supply. And from supply, price rallies all the way down lower. And so what you can really see is that, and that is a big takeaway, and I'll leave it with that. First of all, not all levels and zones will be used for set. Okay. Second, future price or future trend is created by price traveling in between forth and back from monthly high quality demand to monthly high quality supply. That is what is happening, right? We were here, we had high quality supply, price went into supply, price goes down, price went into demand, price goes up, price goes into supply, price goes down, it breaks potentially demand and support and so on, bearish fundamentals, and then price goes and looks for new supply again as a result. So what we see in future price is, and future trend as it's being created is, it's an interplay of price as it moves in between higher quality, higher time frame supply and demand that are not always working as they are here. We know that not all the demand and supply zones are working as nicely as the charts that I'm using as a way of education. We know that not all levels will be holding. However, the monthly levels have the highest likelihood to be holding. The higher the time frame, the better. And what else do we use to get more probability? We use fundamentals, so that up here we have bearish fundamentals, down here we have bullish fundamentals, here we have bearish fundamentals. And so we align our fundamentals with our higher time frame supply and demand to argue A to B. That's the road. And supply and demand is going to argue, hey, from where to where could that A to B go, right? Where potentially, if I have bearish fundamentals, am I expecting price to turn? Because I may have those bearish fundamentals already here, right? Already here, I may be able to argue, well, I have bearish fundamentals, but I don't want to sell unless price is in monthly supply. And same with demand. As price is in demand, as I have bullish fundamentals, I can argue A to B. And then demand and supply is my means of timing where I expect price to go and from where I expect price to turn. All right, everyone. So crispy 2 hours today. I'll now stop the recording. Feel free to stay online and ask questions if you want. Thanks again, everyone, for watching. Happy and safe trading, and ciao.